Alright everyone, Cowboy Trades here, welcome back to the channel for another update on Solana. So since our last episode, it looks like we've lost that crucial line of support that we were talking about. I just wanted to give you a quick update on the lower time frames, build our way up to the higher time frames, talk about things like Elliott wave theory, rejection levels, and also my price targets in the immediate short term. So let's start off on the lower time frames and build our way up. Now if we do zoom in over on here, you can see if I remove some of these Fibonacci regions to make it a little bit more clear, you can see as we discussed, we came right up to these previous range lows in June, and we've pretty much double topped at these areas, and it looks like on the candle body closes for the weekly time frame, we are starting to M out and head back down to the downside. We've been rejected from the EMA ribbons on the weekly time frame, and if we do come over to the daily time frame, like we also discussed, this looks like a huge bar pattern with a spiky top range. There is definitely a possibility we could bounce a little bit more, head up for another level, maybe $24, maybe $25 before heading back down. It doesn't mean that we have to just head back down in a straight line. If we are going to come down to this bar pattern, this should be meaning Solana should be coming down to about $7.80, which would definitely be pretty brutal. Now in terms of where we are for the Fibonacci's, we're sitting just above the 1.236 Fibonacci at $20, so that looks like a strong magnet region in the immediate short term. And if we're also drawing our Fibonacci from swing high down to swing low, you can see this 618 Fibonacci is exactly where we double topped in terms of these wicks and these candle body closes over here. You can also see what's interesting is the 618 Fibonacci beautifully lines up with these swing lows. It almost beautifully lines up with the EMA ribbon, so we've got a plethora of rejections which have been taking place in this zone, which is causing Solana to move back down to the downside in the short term. If we also look at our lowest time frame Fibonacci right now, you can see from this swing high right here down to this swing low, we did have a slight deviation, SFP swing failure pattern above this, but then solidly moved back down. So this is looking like a swing failure pattern high for me. So we should probably be heading back down for a swing low beneath this, once again, $20 region, which we just discussed. Now, in terms of where we are in the lower time frame Fibonacci's, like we said, from the swing high down to the swing low, once again, like we discussed in the most recent video, this was really your last line of support, your 618 Fibonacci and your 0.5 Fibonacci sitting at $23.25. We have lost this region and we're starting to fall down pretty fast. Since we lost the 618, we plummeted below the 0.5, we're falling beneath the 382, we're heading right down to the 236, but really we've lost pretty much most of these crucial lines of support, and as we discussed in the higher time frames, we're right, getting rejected from a plethora of resistances. Now, if we come out to the weekly time frame, zoomed out a little bit, I know I said lower time frame to higher time frame, we're still looking at the weekly, but we're just more zoomed out. If we are looking at this chart over here, you can see another region that we got rejected from. We were magnetized up to this level, which was the range lows that we just looked at in the previous chart. Also, EMA ribbons here, so I will remove them. We just discussed these, but this was a huge area of volume that was previously traded on Solana. You can see how much data was established in this range before. We broke to the downside, we pinged down, we fell to an area where there was no liquidity. We didn't have enough momentum to break down to these, $5, $4.50 price targets where there's huge amounts of volume traded. So what did the markets do? Market makers pushed us back up to this huge area of liquidity. We grabbed a lot of liquidity, and now it's looking like we're ready to have that next major move take place in the markets. You can say it's market makers. Also, Vitalik Buterin, founder of Ethereum, tweeted support for the Solana network out here. So it seems like there were a lot of powers in play to move back up to these regions. Now, before we discuss the Elliott wave theory, just very quickly, as we've discussed these, slightly lower time frame and higher time frame rejections from these key zones, if we do also talk about the oscillators quickly, you can see for the oscillators on the weekly time frame, the stochastic RSI is currently all the way up at 90. Now, we did have a bearish crossover right here, and we had a candle body close correlating on the weekly time frame at $26 for this one. You can then see that we had a bullish cross roundabout here. We moved up. We still had a candle body close beneath $25, which means that in terms of the candle body closes, this M pattern is nicely lining up with the stochastic RSI. We have not yet had that second bearish crossover on the stochastic, but as we are really overextended right now and it's looking like we're starting to turn down, for example, if we turn over to The Heikanashis on the weekly, you can see once again we're switching into red, which most of the time for Solana means that a big move is coming back down to the downside. And on the daily, you can see we've really started a nasty downtrend on the Heikanashis on the daily time frame. So it's looking like the stochastic could start to turn down very, very soon. You know, the last time that this started to turn down, we did have a monumental move to the downside, and we're more overextended than we were back then before Solana had that massive capitulation. You can also see the money flow index. Liquidity is extremely extended right now. We're sitting around about 75. We got a rejection just underneath 80, meaning that we are extremely overbought. And once again, it's looking like we're going to start turning down. We've had, you know, 2 macro tops before, prior to this, round about this 80 region, and once again, while we don't have a linear downtrend for this, you can see, you know, once again, a trend line wouldn't really work on this one, but we do have a downtrend still in play in the higher time frames for the MFI, and the squeeze momentum indicator has completely reset momentum. In fact, we're even in slight green at this moment in time. So if we do have that next move back down, there's going to be a lot of momentum. There's going to be a lot of room for bears to push the price back down. You can see the last time momentum completely reset was right here. We've completely reset momentum at this point, and you can see in the bear market, when you reset momentum at these areas in correlation to the squeeze momentum indicator down here, you can basically see what happened. All bearish momentum was reset here, and once bearish momentum came back, it came back in a major way. So that's what I wanted to talk about. Let's now move on to the Elliott wave theory. So we talked about this on the channel before. This is the WXY double free structure. I won't explain it too much because I've explained it before. If you want to read up on this more, feel free to pause the video and read up on this here. And I will also leave the link to this resource down below. But in terms of what we've got, this is a WXY double free structure. This constitutes of 2 zigzag ABCs, an any free ABC. So once again, zigzag, any free, and another zigzag. So you can see, as we've previously discussed, you have a macro WXY. In the slightly lower time frames, this consists of a B, C zigzag pattern. Then we have an any free, which doesn't have to be necessarily like a B, C or an A, B, C. It's basically any free wave count. So from wave W, we went up to A, wave B, wave C, forming wave W and wave X. And since then, you can see we've had a huge move down to wave A. We've had a bounce back up to wave B. And like we discussed in the previous charts, you know, we're getting rejected at so many different areas, which are lining up with this lower high for wave B being lower than wave C. So this WXY double free structure Elliott wave theory is looking very convincing right now, and I do have a price target for this all the way down at $4.50, or the psychological target $5. This price target is in correlation to where the volume is traded in the market. If we come back over to our second chart, what you can see, getting rid of these, which I just drew on the chart, getting rid of this, you can see where is the most amount of volume traded in the market. Well, yes, this VPVR down here at $2, which is not my price target, but really the most amount of data traded is down here. It starts to kick in at $4.50. There's also, you know, a touch point right here at $5, and this is also a huge psychological level, $5. So this is really the magnet zone that I do think Solana is going to be coming down to, and as long as we don't exceed this previous wave right here at $38.40, then this WXY Elliott wave theory will be completely valid. Let me get the approximate price target for that. On some exchanges, it's around about $38.50. On some exchanges, it's $39. Really, if we start coming up to 38 or 39, that is going to be a worrying sign if you are looking for this to play out at this moment in time. But for right now, it's looking like a lot of rejection points are lining up with the fact that Solana could be coming down to these price targets. So that's all I've got for you today, my friends. Just wanted to give you an update. As always, if you do enjoy my content, let me know down below by leaving a like and a comment. Share the videos with your friends, and also make sure to come and follow me over on Twitter at 618_cowboy. For today, that's all I've got. It's been your boy Cowboy Trades. I'm out. Peace.